Hey gang, welcome back to another Forex Market Preview video. If you are one of the close to 110,000 subscribers or 33,000 subscribers on my personal page that watch this video each and every week, I just want to say a big thank you as always for supporting what we do here at Trade Empowered. We've been able to grow just an amazing community, and most of that is because of your help and from you guys setting the tone. And if you guys are new, if you're stumbling across this video for the first time, my name is Akil Stokes. I am a professional trader as well as the head trading coach over at tradeempowered.com. And believe it or not, once upon a time, I was exactly where you are at now, meaning I was hunting across the internet looking for some type of tip to help me really make the transition from consistently unprofitable trader to consistent profitable trader. And luckily, obviously, I found that missing ingredient. And well, although I offer paid educational services, although I offer paid training courses, which seems to offend many people, it's always offensive when you have to pay for something, right? Something I like to do to just give back is do these type of free videos. So the free workshops that we have on our website obviously is part of it too, but the free video here on YouTube is very important to me because this is how I found the difference maker in my trading career. And, you know, I just want to offer that opportunity to others as well. So what we're going to talk about in today's video is the euro dollar. We're going to take a long-term perspective since there isn't really too much happening in the market that is of interest. But I want to start things off by just giving you a quick little recap of how our trading has been. We have just ended a month. We have just ended a quarter, and traditionally September has been a very tough month to say the least. And well, we ended it with a bang, and this is actually the second September in a row. So 2 years straight that we've been able to really navigate this beast of a month and perform exceptionally. And it's just, you know, we've made adjustments in our trading based on how the month of September is, and we followed through with those adjustments, and well, that hard work is paying off. But one of the best lessons I can give you, and if you guys are in the syndicate, just I did upload a video late on Friday giving you a kind of a detailed monthly recap. So looking at equity curves with money management, without money management, win percentage, percentage buy, strategy, all that fun stuff. You can check out that video on our member site. But one of the things that I brought up that was very interesting was last month, right? The pound dollar, we had a good month last month, but last month the pound dollar was a pair that really sunk our trading, meaning we performed very, very, very well, but it could have been so much better if it wasn't for that single pair. It lost a lot of money. However, this month, the pound dollar was our second best performing pair behind the pound yen. And it just proves that you don't want to be so quick to jump ship. That's one of the issues that I see with a lot of struggling traders is as soon as something stops working all of the time, they're very, very quick to dump it and try to move on to the next thing. And the next thing usually works for a little bit, and then there's going to be a patch where it doesn't work as good, and then they dump it and they move on to the next thing. And typically by the time they dump something, right, as soon as they dump it, I don't know why it's always like this, right? Pure coincidence, I guess. Or maybe it's the rule of averages, but as soon as you dump something, it then seems to perform, right? Have you guys ever been there? Have you guys ever quit on a strategy only to go back and see that, oh man, if I would have just kept trading that strategy, I would have done this great? So the key with trading is you have to give yourself, it's consistency, of course, right? You can't be jumping in and out of strategy or in and out of trades, right? You got to be consistent in your execution, be consistent with what you're doing in the market. But you also have to give yourself a big enough sample size, right? You have to understand that, hey, every trading day isn't going to be good, or every trade isn't going to be a winner or going to be good. I take that back, I shouldn't say good. Every trade isn't going to be a winner because we can have good trades that are losing trades. Every trade isn't going to be a winner. Every day isn't going to be a winning day. Every week isn't going to be a winning week. Every month isn't going to be a winning month for everything, right? Just like how the markets ebb and flow, so do your trading results. The key is over time, right? So when you look at your year-to-year results, are you bringing in a consistent profit? And even within those results, it may not be with every pair. There are going to be years where a certain strategy may not work well in a certain pair. And that's where having a portfolio of pairs, having kind of a self-hedging setup helps things out, because one pair may perform poor and the rest of the pairs make up for it. And then that next month, maybe a handful of other pairs perform poorly, and the pair that performed poor the month before, now that makes up for it. And that's kind of what we saw in our trading this week, as we had a few pairs that we were just 0 for. But because the pound dollar, because the pound yen performed so great, those other pairs didn't even matter. So it's always good that we can not only make a lot of money, but we can provide a lesson to our clients as well on what the reality of trading looks like. And, you know, speaking of our clients, it's also pretty cool to see that many of them had fantastic months as well. And it's always good hearing that type of feedback. In fact, I got one right here for one of our former course members. And I guess you're not a former course member. You're always a course member. But he said, hey, Akil, just want to drop a note real quick. I said, I had my best trading month ever since last year when I decided to go for the 12-week transformation course, right? Shameless plug. Not by me, by him, so don't get upset, right? I pocketed over 1,000 pips this month. May not seem fancy, may not seem like a fancy performance, but really what is important is that the 67 trades total that I took, only 5 more were mistakes. And I love this, right? First of all, 1,000 pips a month is nothing to sneeze at. I know the internet will tell you all sorts of other things, that you should be making 2 million pips every hour on the hour, but in reality, that's just not true. But what I love about this trader is he talked about process over outcome. So he's like, yeah, I made some money in the market. That's all good. But what's really important is that out of the 67 trades I took, only 5 were mistakes. So only 7.5% of my taken trades were quote unquote bad trades. And we all know that if you eliminate bad trades, if you consistently take good trades, that's how you achieve consistent profitability. So he says, these mistakes are related to emotional errors where I did not follow my trading plan, getting out early before reaching my target profits. So seeing the money and grabbing it and not letting the trade play out. My goal since last year when I became a professional trader is to achieve a 3% error, meaning only have 3% of his trades per month being bad trades. And he's almost there. So the goal is to do less and less errors. And for you guys that maybe haven't heard my origin story, I promise we'll get to euro dollar, I promise. But for you guys that haven't heard my origin story, that's how I really turned my trading around. Is instead of worrying about how much money I was making or how much money I was losing, I shifted the mindset to, hey, Akil, you're making 20 mistakes a month, right? My only goal was to make less and less mistakes per month until eventually I got down to very, very, very little mistakes. I'll never get back. I'll never get down to 0 for the entire year, but I'm very rarely do I make a trading mistake. So it was pretty cool to hear this trader say that. It says getting closer and closer to following the plan. Man, I realize, and I feel good with myself. So he's proud of himself. Thank you, coach, for all that you give me with your YouTube videos, your syndicate videos, and being like you are a good man. God bless you, and I appreciate this. This is a trader I worked with a few years ago, actually. So he's out on his own. We still stay in contact, but he's out on his own, kind of finding his own path. So pretty cool to see. All right, now let's give you guys what you want. You want some chart talk. So let's look at the euro dollar. And again, I want to take a long-term perspective on this, really because there isn't too much happening in the market that has my attention right now. And I want to show you really how I game plan for the markets. And game planning is important. If you've been in any of our free workshops, you'll notice that Jason Stapleton does a lot of terminology that has to do with military, right? He's a former military, so he's used to strategic planning, rules of engagement, stuff like that. Although I've never been in the military, I have been an athlete for the majority of my life, and being an athlete is very similar. Like being a football player, we game plan for the situation. So throughout the week, we map everything out. We watch film on our tape, and we try to predict each possible scenario, and then ask ourselves, how will we react to that possible scenario? And that's kind of where that if-then thought process comes from. If the market does this, then I do that. If the market then does this, then I look to do that. And it kind of sets us up. We call it being in the market's OODA loop, and it puts us one step ahead of the market, not in the fact that we know what the market's going to do, but we know how we're going to react if the market does really anything. And what I'm looking at here on euro dollar is I'm really looking at a potential reversal in trend. You can see we've been in a bullish trend essentially since the beginning of the year here on the euro dollar. You can see 2017 right down here, and we've just gone again from the bottom of our screen to the top of our screen, right? That's the easiest way to identify trend. Are we going from bottom left to top right? If we are, then we're in a bullish trend. If we're going from top left to bottom right, then we're looking at a bearish trend. And of course, if you want some more detailed training on how to read a trend, we have a free training workshop on our website called Into the Gray that will teach you that. But I'm looking at recent price action here, and I'm starting to anticipate the end of a trend. And that's for a few reasons. One of the reasons is just the slope is getting smaller and smaller. So you can see we have a very steep slope here in the beginning, right? We're making sharp moves up, very big candles. And we come up to this recent level and we're still going up, and then we start to kind of consolidate a little bit here. And then we shoot up, right? And then this is the important part. We shoot up here, we retrace, right? We had actually a very, very good trade here. If you watch, I think, maybe about a month ago to Forex Market Preview, we caught about a 200 pip move on this breakout. But you can see the market retraces, which is normal. And then we come up to test our previous structure highs and we get rejected. We come back down, right? We test our previous outside return, which is all normal. We come back up again and we get rejected, right? So although we're still in a bullish trend here, you can see that we're having trouble making higher highs, right? We're having trouble making higher highs as we start to go more sideways. And then this week we break out to the downside. Now we're still not in what I would call a bearish rotation yet, because this is going to be that level for that. But you can see clearly the market has refused to make new structure highs, and now it's starting to think about, hey, do I want to stay in this bullish trend or do I want to reverse? And if we look back at the last time price has changed trend, right, you're going to see the same thing down here. Price action was bearish, moving from the top left to your bottom right. We came down here, right? We kind of consolidated a little bit, put in new structure lows. Price action tested these lows, right? 3 times as well. We spiked up, came back down. We kind of went sideways here, and then boom, that was the end of the bearish trend. And we started our bullish rotation into a bullish trend. And this is something called, it has many names. I learned it as the Wyckoff cycle. I know there are a few different names out there. Forex is interesting because we don't all share the same terminology, but we know what we're looking at. But essentially, what it says is that the market moves, and this is kind of traditional, just technical analysis type stuff. The market moves in kind of 4 cycles, right? You have your accumulation phase. Yep, right here. Let's get to that. Have your accumulation phase where the market really consolidates, and your institutional traders, they're building orders, building orders, building orders. We have what's called your markup, right? That's the extension out of that phase. So your bullish trend here. You have your distribution phase, which is another area of consolidation. And then you have your markdown, which is going to be your bearish trend. And if you look right here, it looks like we're starting to form that. It looks like we're starting to form a little bit of accumulation. We have our markup, distribution. We have our markdown. And again, we could either see, obviously a continuation of this trend, but it looks like we're going to see some type of reversal. So as we start off this week, I want to prepare myself for the different scenarios, and here's what I'm going to do, right? And many of you may be looking at this and saying, Keel, what about the head and shoulders? Same thing, right? The head and shoulders kind of forms into that traditional format of you're up here, you're down here. This is going to be a head and shoulders, which is a classic reversal pattern as well. But what I want to do this week is I want to ask myself, if the market is going to break lower, then where are we likely to go to? And that's a tricky question. And to help you guys, I'm going to go over to my NinjaTrader chart, just because I have a little indicator on here that may make life a little bit easier for you. So what I would expect this week from the market is this, or what I don't say what I would expect. What may happen in the market is this: price action comes back up to test this level, right? The lows of our consolidation, which happen to line up with the left shoulder here, if you guys are looking at this as a head and shoulders pattern. And then we may put in a test of this level. And the question I want to ask is, if price breaks this level, then where are we likely to go to? And then how can I get involved? If price holds this level, I can always look for more bullish entries, as we've been doing for the last few weeks, and a chance to ride it up. I'm already prepared for that opportunity, so I want to mentally prepare for the secondary opportunity. So if price action is going to break that level and go lower, where are we likely to go? And I want to look for our previous levels of structure. And we have a little bit of a shelf here, but it's not all in the same area. You can see these red lines are all kind of previous structure highs, and they're really all over the place. And what I want to do to make life easier for you guys is I want to bring in my swing indicator here. This is kind of a custom built swing indicator called our swing DSR. So it's a little bit different than the regular DSRs, which you guys have seen, which measure levels of support and resistance. This kind of measures more like the swing indicator where you don't have the zones, you just have the kind of the high marks. But let's put it on a daily. Yes, keep it at 21. And you're going to see, right, if I delete my chart, we're going to get a cluster of these swing highs in red right around this level. And these were the same levels that I drew those lines at. So let's take it right here about 114.28 to about down here at about let's just call it 113 even. This is the initial zone that I'm looking for. So after I've already eyeballed this setup, or I guess this area, then I can be a little bit more detailed. I could use my other tools. I can bring in, say, my Fibonacci retracement tool. Bring in a Fibonacci retracement from our swing low to our swing high. Up here, you can see we're going to get a 382 Fibonacci retracement at the top of this zone. So little 382 confluence right there. I can take a Fibonacci extension tool. I can do a few things with it. I can invert it from our previous swing high right here to our previous swing low and back up. It's going to give me a 1618 Fibonacci extension right inside that zone. We can also anticipate, again, we mentioned that if this is going to reverse, we could see a retest of this structure first, kind of like a head and shoulders, and then a continuation down. So if this does turn into a head and shoulders pattern, we can look for an equal measured move from the head down to that neckline. We can copy and paste that, and a 1-to-1 measured move would put us right down here. We can also take a Fibonacci extension tool once again from that A to that B leg of this ABCD pattern, right? And we'll get a little Fibonacci confluence with that 1618. So I've got an area essentially right between 115, because this is a psychological number, right? 115 even. And let's just put it right here at 114 even. And this is the area in which I would expect price action to continue to if we break below these lows, right? Now, what's important here is, and some of you may be saying, well, Keel, this is a really big zone. Well, keep in mind, we're on the daily chart, so it's not as big as you may think. But I don't necessarily care about using this zone to find a buying opportunity. Remember, what I'm looking for is a shorting opportunity. So the question I want to ask myself is there room between this zone right here and these lows, because that's what I need to see a violation of? Is there enough room in this zone for me to profit? So is there enough room between 166.66, ooh, 666. Let's say 166.67. We won't get any bad juju our way. Is there enough room between here and here? And you can see there's 172 pips of profit. Now, I'm not a daily chart trader. I use the daily chart as a way to really do my top-down analysis, right? My swing trading takes place on the 4-hour and the 60-minute time frames. My day trading takes place on the 15 to 5. And 172 pips, and it could be more depending on how much the retracement is, but 172 pips is more than enough room for me to find a trade, right? If you looked at our syndicate members, if you saw our average results for this month, right, our average winning trade was 46 pips, right? So there can be a few trading opportunities in this zone, and what this tells me is that there is room for me to potentially profit in this area. And this is an opportunity that I want to have on my radar as the week goes ahead. So in this type of planning, I'm not really looking for the trading opportunity. And that's I just wrote an article for FX Trader magazine on this, about the difference between looking for a trading opportunity and performing analysis. Hopefully that comes out this month in October. Sorry about that. I'm pretty popular, guys. But where was I at? Brain fart. There we go. Yeah. So I'm not looking for a trade for you guys that have the mindset. Just give me the trading idea. I'm not looking for a trade. I'm doing analysis, right? I'm taking notes. I'm writing down my if-then thought process, preparing myself for this scenario, which may not happen, right? But if it does happen, I'll be prepared for it. And I know what's on my radar to look for the week ahead. That way, if it does happen, right, I'm not late to the trading opportunity. I'm not missing the trading opportunity. I'm taking full advantage of it because I've already prepped myself on what to expect and what to do if that prediction comes true. So again, that's an example of what I like to do. I mainly do this on the weekend. We do a top-down analysis every day in our live trading room, but I really like to spend the weekends to dig into the higher time frames and just take these broad notes of what I would expect from each of the pairs in my portfolio for the week. And then that way, as the week goes on, I can kind of just look at my notepad and check, and really treat it like a playbook. And just follow the playbook, follow the plan. And that's allowed me to be consistently profitable for the last, 7-8 years now. So glad I got to share that with you guys. If you have any questions about it, feel free to leave a comment below. You can feel free to shoot me an email as well. My email is akil@tradingpowered.com. I typically don't give that out, but you guys have been asking some pretty intelligent questions lately. So as long as it's a good question, I don't mind answering it. Just don't shoot me a question that says, Akil, when do I buy? Because you're going to get a very rude answer if I answer at all. But I appreciate you guys watching the video. As always, it's amazing the amount of support we have here. It's amazing the amount, just the amount of traders that have let us know that they've been able to make strides in their trading career because of us. And it's not really because of us, it's because of the trader. We can tell you, we can give you the super secret to success and you can still blow all your money. So it's really up to the trader and how much they're willing to work. But it's pretty cool to see that we've played a little bit of a role in that. And I love it every time you guys shoot comments and tell me your success story. So keep it up. If you got a success story, if we helped with it, shoot me an email, let me know, shoot me a tweet, leave it in the comment box. It makes my day every time I read them. And it really encourages me to do this video for you guys each and every week. So keep it up. And I will see you guys next week for another Forex Market Preview video. As always, if you want this video sent to you through email when it first comes out, sign up for our email list. There's a link below, just tradingpowered.com/forex-market-preview. Typically, I'll mail it out before I put it on YouTube. So if you're fiending and drooling and shaking for it, come get your fix. We don't spam. We just let you know about discounts and all types of free training when that happens. So get on that email list. And until next time, traders, plan your trade, trade your plan. You guys have a blessed weekend and good luck in the month of October, my birthday month. Take care. All right, traders, so I hope you enjoyed today's video, and if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our tradingpowered.com website, or also take a look and you'll see more videos available for you. Have a good one.